and welcome to July. This is Andrew with the Andrew Smith team of eXp Realty, and we are obviously in the middle of summer and therefore the height of the real estate season. So today we're going to cover our June real estate market. We're going to cover the real estate market update for July 2019. Yes, I can't believe how fast the year is moving, so I'm obviously still a month behind. Now, if you've seen any of the market updates that I've been putting out all year, you'll know that there's been kind of a common theme. We're not going to recover all that material, but we were talking about a shift in the market, the expectations of changing in the early part of the year. There was a lot of talk about a recession and the impact that could have on the housing market overall. And those recessionary fears have kind of waned. And we covered that in more detail in last month's market report. This month, we're actually just going to kind of take a look at, now that the first 6 months of the year are done, kind of just take a look at the health of the market, where things are at currently, and what has changed with regards to the predictions going forward. Now, first off, let's look at pricing. Now, we saw pricing start to stagnate, so to speak. The levels of appreciation were dropping, and that was fueling speculation that there's some strong headwinds possibly in our future. All of that has gone away to a certain extent. And the average sales price nationally across the board is still appreciating. In fact, if you look year over year nationally, the average appreciation is just over 5%, 5.05, I believe is the actual number, but just over 5%. Although the rate of appreciation is slowing, which is a good thing. I mean, what we've seen in the past of 8, 9, 10, 12, 15% a year rates of appreciation are just simply not sustainable. Wages aren't going up that fast, and it really calls or brings affordability into question. Now, although appreciation has slowed, as I mentioned, it's now running at 5.05%. Historically, the healthy average appreciation level is just over 3%, about 3.2. So we're still running above that number. And in a lot of the surveys I've done, 100 of the top leading economists on real estate, the forecast now has actually been revised up each of the past 3 months with regards to the expectations of the appreciation levels we're going to see over the next 12 months. So, a lot of the concerns about the overall real estate market have waned again, like I said before. So what's causing that? This is a complete flip-flop from the market a year ago. In the first half of 2018, we were flying. We were still seeing multiple offers in most areas. Pricing was going up substantially, and you had everything just moving very quickly. And we ground to a halt, so to speak, at this time a year ago, starting in July. And when you look back, you can put a lot of that down to interest rates. The interest rates really started to rise, which was unexpected at the amount that it rose. The Fed raised the federal funds rate, knock-on effect across the board, and rates went up. And sales drastically slowed. And everything kind of took a little while to pick up. But unexpectedly, rates started to come down again late December. So they've actually continued to fall all the way up to currently this year. And interest rates now are actually at the lowest level than they have been, mortgage interest rates, in the past 3 years. So that has added a lot of fuel to the real estate market. And it's looking like this year is going to be the reversal of last year. Last year started strong and finished a little bit weak. This year, for the first 6 months of 2019, has started a little bit slow. Pace of sales have been down. You may be noticing more for sale signs in your neighborhood. You're seeing houses are taking longer to sell. But that pace of sales is starting to pick up. And it's now expected that the second half of 2019 is going to be fairly strong. So there is now actually, with that in mind, there's actually a very low probability that prices are actually going to be lower 2 years from now than they are right now, which is different than what was forecast just a few months ago. The one exception to that rule or that thought may be in the luxury market, and that's only due to the fact that there is an abundance of inventory in the luxury market. There's just a lot of homes for sale there right now. So back to interest rates. With interest rates going down, what is that actually doing? What's the impact and why is that fueling sales? Well, obviously affordability is one. Wage growth is up, and with the interest rates dropping to the level that they are, it's bringing a lot of people back into the market that decided to wait. And it's also caused the number of homes for sale, inventory, as we would say, to start to increase. So why is that? Well, imagine you're a seller that bought within the last 5 or 6 years, and you got an interest rate of 3.5%, 3.75%, somewhere in that range, somewhere below 4. If in the last year you were considering moving, there was a double whammy. I mean, there wasn't a whole lot for sale, number one. So where were you going to move to? And additionally, because interest rates had jumped up into the mid 4s and even started to creep a little higher than that, there's an affordability issue at play because of the fact that your new home is going to be less affordable. You're going to have a higher interest rate going forward than what you did have you were just selling. So again, the home that you were selling, you may have been locked in at 3.5, 3.75%, and you're going to buy a home and now it's over 4%. That creates a challenge for many people. But with interest rates dropping back down and inventory going up, it creates an opportunity for anyone considering making a move and jumping up into their next home. There's actually more buyers out. There's more inventory available, so there's more options for them when they're out looking for homes. And with the interest rates back down to the lowest level they've been in 3 years, they're not going to take the interest rate hit that they would have taken even though they're getting a more expensive home. Hopefully that makes sense to you. Now, again, I've covered some national trends here and talked about the overall state of the market, but we all know real estate is infinitely local, and what is going on, across the nation or even across the region may not directly be what you're seeing in your neighborhood, which is why I offer monthly market reports for your neighborhood, specific to your home and your area, that's going to show you the latest trends and activities in your neighborhood. If that's something you'd be interested in, just shoot me an email, andrew@theandrewsmithteam.com, and I'll get back in touch with you and be happy to set those up so you can see what's going on in the area of most concern to you. And as always, any questions, comments, concerns, a unique situation you want to talk through, go ahead and give me a call. Always happy to talk. You can reach me at 888-447-9650.